Global investing is not about only picking individual stocks. Yes, investors can directly invest in US listed companies after studying their business, earnings, and growth potential. But there is another route for investors who want broader exposure without selecting every company individually. That route is called Global ETFs. Global ETF, or Exchange Traded Fund, is an investment fund that trades on a stock exchange just like a share. Through one ETF, investors can get exposure to a basket of companies, sectors, or themes. For example, instead of buying only one tech stock like Apple or Google, an investor can buy an ETF like XLK, which consists of various tech companies. So ETFs can make global investing simpler and more diversified. Broadly, there are two types of ETFs, passive and active. Passive ETFs are designed to track an index. For example, the Vanguard S&P 500 ETF tries to mirror the performance of the S&P 500 index by holding companies from it. There is no active stock selection by a fund manager. The goal is to replicate the index as closely as possible. Active ETFs work differently. In an active ETF like ARK Innovation, a fund manager or investment team actively selects the securities based on their research, strategy, and market view. So passive funds follow an index. Active funds follow an investment strategy. Global ETFs can be based on different ideas. Some track broad markets like the US or an emerging market like Brazil. Some focus on sectors like tech, healthcare, or energy. Some are thematic ETFs built around long-term trends such as AI, clean energy, or defense. So instead of asking only which company should I buy, an investor can also ask which global market, sector, or theme do I want exposure to. But why do they matter so much? Because they solve three big problems. First, diversification. You are not dependent on only one stock or one company. Second, simplicity. One ETF can give exposure to dozens or even hundreds of companies. Third, flexibility. Investors can choose between broad markets, sectors, or active ETFs depending on their investment objective. This makes ETFs useful for investors who want global exposure without much effort. The key takeaway is simple. Global ETFs helps investors access global markets without having to choose every company individually. Some are passive while some are active. So, ETFs can be a simple and practical way to participate in global opportunities without much hassle. If you want to understand global investing, follow this channel. You can contact us at 92898 37100. We will be happy to guide you.